All right. Got the happy Finance Friday. We got our president, Craig Garcia, back in action
I'm
after
back.
he after his world travels. It's good to be the king, so to speak. In any event, so as normally, we like to talk about three things, mortgage rates being one. We'll talk about some topical news or things that's in current event news that has an influence on mortgage rates, number two, and then about a specialty loan product that we're going to discuss today. That we had a nice closing this week to talk about, and it's a really wonderful story. Mortgage rates, Freddie Mac survey rate comes out. Right, we're getting closer at 7%. Right, Greg? I mean, average. Now, every time we see people think, oh, this rate, it's an average 7%, basically. 6.91 is, I think, what the survey said, right?
Correct.
Yeah. So we don't want to cross that threshold of getting over to 7%. We got to, hopefully it stays at 7% or below.
Yes,
Right? Yeah.
that's right.
So
But
speaking of rates, and I know
yeah,
you and I were talking about, so let's talk about rates and in the news. And, whenever we talk about current events in the news, it seems like we always talk about the president of the United States because he has an opinion on a lot of things, and he wants to fire Jerome Powell.
it's pretty interesting stuff. I think so. It was obviously the big news of the week in our world, or one of the things that happened was Trump. This news story broke that Trump was just about to fire Powell, and because he wants rates to be lower. And the initial reaction, the funny thing is that the initial reaction of all the markets was that this would not be a good thing to do. Um,
Right.
Stock market sold off, the bond market did worse. I mean, this was it. The initial reaction to this news would lead one to believe that that if he was to do that, lower rates may not be ensued. That the market much prefers this separation between
Yeah.
uh, church
Or
and
the
state, so to
stability.
speak.
Listen,
You
with the
know,
stability, and really, he was nominated and confirmed for a certain term. And now the president's trying to say, hey, we need to get rid of this guy because we need to lower the rates, et cetera, et cetera. And like you said, the market favors the stability and really kind of the separation in a sense, right? I mean,
yeah. I mean we've said all the time, when the Fed lowers rates doesn't mean that mortgage rates are coming down, and
right.
sometimes the exact opposite thing happens.
That's correct.
Um, and so you know, this it just is another thing to say, hey, it's an interesting dynamic that plays out, but the thing that drives mortgage rates up or down is the willingness of bond investors to want to buy bonds at the rates that are out there. You really want
Right.
them to buy bonds. You really want them to be aggressively wanting to buy bonds, um, accepting lower rates out into the future because they don't know that they're going to get a better rate of return in other places. You know what I
Right.
mean? And so the um, the idea of dropping short-term rates a whole lot could be seen as inflationary, which is not good for the longer-term rates, and
Yeah.
that's why the longer-term rates could rise if Trump got what he wanted tomorrow, for example,
Right.
and just hey, lower the rate a whole bunch.
To
So
me,
yeah,
the story at the end of the day is that everybody thinks, oh, the government needs to do this and bring rates down or help the mortgage market. At the end of the day, nobody has that magic wand. There's a number of factors in our economy that have influence upon rates, be it mortgage rates and so forth. And there's a number of economic factors that influence it. And there's really nobody has the magic wand. Listen, we'd all like to have mortgage rates in the fours, fives, or whatever, or even like lower sixes, but there's just no quick fix to that. At least that's what I see. That's I mean,
I think that's correct. So thankfully, later on that day, Trump came back and said, I don't intend to fire Powell."
right,
It's basically
right.
false alarm. Or, we
I
talked
know.
about it. But I had a conversation. That was it. So
Yeah,
that's the story.
it's all fun, and at the end of the day, rates trended kind of slightly upwards. We're still a little bit above that average of 7%. Let's hope it
Yep.
doesn't get above the seven. And hopefully
Yep.
it'll stay in that range. So, but interesting stuff, and that's kind of where we are as far as the end of the week with rates are concerned. But the great story this week, I had a closing this week, a really, really great story, and we still, here we are, July, July, what's 18th now, 17th, 18th, and here the state of Florida, they've announced that they're going to have $50 million for the Hometown Heroes program, but we still don't have the details. Capital Partners, we have our home front heroes. We have a number of down payment assistance programs available. And I had a closing this week. It was a wonderful story. Family, very, very hardworking family. They bought a $460,000 single family home, completely renovated in Margate for $460,000 home. It only came in with $6,000. We got them the down payment assistance of $17,000. They got $13,000 and change from the seller as a seller concession, and they came in and bought this house. It's all been done over too. Nice house for $6,000, and their payments. I mean, competitive. The interest rate was mid sevens, and this down payment assistance program that we gave them the $17,000. It's forgivable after 5 years. Great program, right, Craig?
That is an incredible story, Bill. I mean, because again, $460,000 property, and they got into that property not their earnest money deposit of $6,000
total.
At the end of the day,
right?
They got in for $6,000. I mean, that's quite a testament to the what a buyer can get accomplished in this market.
Yep.
You know what I mean? When you have sellers that are willing to negotiate with them.
That's right.
And working with the right people that have different programs, different ways to structure things. The idea that you're going to get $17,000 that after 5 years you don't even have to pay it back in down payment assistance.
Great program.
That's
and when I met with the clients, what's that?
That's a home run.
Home run, a total home run. When I met with the clients initially back in late May, I said, hey, this Hometown Heroes may be coming out. We don't have the details, but by the way, here's two options. If we get Hometown Heroes, here's where we are. If we do not, we still have this other option. They actually like the other option from the get-go because they're long-term people, and they say, hey, you know what? We like the fact that this is a forgivable second mortgage and $17,000 goes away. And they actually chose that option. Great story, great program, and we're hearing more and more stories like that. So, for the agents who are out there now, this is a newer agent. This was his first transaction for his family. Brand new agent. This is his first transaction, and his mentor, who's a seasoned agent, even said, "This is a great deal. Win-win for everybody." We love hearing stories like that. And like you said, somebody buy a $460,000 house to get him only $6,000, which is less you would have to come up with to do first, last, and security on an apartment or something.
That's less than first and security, probably. I mean, so
I know.
I mean, that $6,000 that's not a lot. So
yeah,
that's
right.
That's
great
amazing
stuff. So
really good.
All right. Well, listen. Let's wrap up our Friday call. I know we were on hiatus for a couple of weeks, but we're back in the swing of things and everything.
We're back.
And we want to bring some valuable information to our realtor partners. My dog scratched at the slider. He wants to come out here and play or something. I don't know. But it's all good stuff. But like we said, Craig, we want to help you close more deals and see you
at the closing table.
All right. Well, have a great weekend.
Thanks, Bill.
All right. See you.